So the volatility is the price you pay for the performance that you get. And oftentimes the best investment idea isn't the most comfortable investment idea. I think if I told you there's 100% certainty you're going to lose 7% of your money over the course of a year, you might think, well, I have a decade before I lose half of my money. I have time to think about it. That's the status quo when monetary inflation is 7%. If I told you there's a 100% probability that you're going to lose 20% of your money over the next year and half of your money over the next 3 years, well, I mean, you might think you need to move faster. Well, what if I told you you're going to lose all your money? What if I told you the currency is going to collapse to zero in 3 months, which is kind of what it did in Zimbabwe and Venezuela? Or what if I told you we're going to have 95% inflation? I think the unofficial inflation rate in Argentina is like 85% this year. What if I told you we're going to have hyperinflation? Everything will be twice as expensive next year. Now, how long would you wait before you took a risk? I can, if I really want to, get you to jump out of the pot, right? I could just make it simple. Next Tuesday, I'm seizing all your money. Or you can spend it between now and next Tuesday, right? That really, what is the word? Focuses one, right? Right, it strengthens one, stiffens one's spine and focuses one. If I just made it very black and white, I'm just going to take all your money next Tuesday, or you can spend it between now and then. So how do you actually get comfortable with the volatility? Well, I think first you have to understand how big your problem is. And the second thing is one of time horizon. And what's your aspirational goal? For example, if you don't aspire to change your lifestyle one iota, and you're going to watch Netflix, let's say extreme, you're going to live in your parents' basement, watch Netflix, order Domino's pizza, and stream YouTube video for the rest of your life. Do you have an inflation problem coming? Probably not. If you want to buy your own house, you have a bigger inflation problem because houses went up 15%. If you want to get married, buy a house, have 3 kids, and if you want to take expensive vacations and have a house on the lake, you have a big inflation problem. Guess what? Luxury homes on the lake went up in price a lot.
Same with education. If I plan to send those kids to school, I'm really in trouble.
Yeah, so it really comes down to what is your aspiration, and that determines your hurdle rate. What you want determines your inflation rate, and your inflation rate determines your hurdle rate, and that makes a difference. I think in terms of historic metaphors, there's plenty. For example, my family came to the United States in 1736 on a wooden ship. Okay, and if you want to go study those voyages, they spent 8 weeks. Have you ever tried? There's not a single person that's probably got in a wooden ship with 3 sails for 8 weeks to cross the North Atlantic in order to come to America. The mortality rate is 2 to 5% on that trip.
Whoa.
The mortality rate to go from Europe to the Far East is 35%. It's insane.
Whoa.
1 out of 3 people that started the journey dies on the trip.
Whoa.
Okay, so we talk about volatility. Is Bitcoin bumpy? Is crypto? We're just going to talk about Bitcoin. Yeah, Bitcoin is bumpy. What else is bumpy? Yeah, wooden ships in 15-foot seas. If you want the definition of a rocky ride, the rocky ride was leaving Europe. So why'd they do it?
So you're saying that the bold are the ones rewarded?
If you choose correctly. Right? The ones that moved too soon, went to certain colonies, that on the Potomac River and the James River, and they died, right? So there's a lot of early settlers who took arrows in their back, in the 1600s. On the other hand, by the mid-1700s, by 1736, people had been living in North America, and you had Philadelphia, and you had Massachusetts, successful colony, and the like. So if you choose the right decision or make the right decision at the right time, you can have a better life, but there's still risk. Right? So why did the people come from Europe? They came for property rights and civil rights. right? They either couldn't exercise their religion or there was no hope for them. All the property was owned by someone else. And property rights matter. A lot of people don't realize this. They think that they think that property rights are a nice to have. Property rights are a nice to have the same way that fat on your frame or an insulin are nice to have. If I strip away your insulin, you're a type 1 diabetic. You can't form fat. If you can't form fat, you can eat all day long and you're going to starve to death. It's not a nice to have to store energy over time. Fat is an organic energy battery and property is a social energy battery. So being able to store property means I can go 3 months without a job and not starve and live a life. There is no hope for a civil life without property. So, people went from Europe to the US for property. When they got to the East Coast, they went west. It's in the American ethos. Was there a bumpy ride taking a wagon train over the Rocky Mountains? You ever fly over the Rocky Mountains and look down? Before they had the railroad and before they had the highways, and then you ask, how did people actually cover the turf? It's like, yes, it was a bumpy ride. There was volatility along the way. I think the risk and the discomfort today of owning Bitcoin is a heck of a lot less than the risk and the discomfort of getting in a ship or getting on a horse or, getting in a wagon or walking, right? Or settling and doing what you need to in order to secure your civil rights and your property rights and your freedom. But there is an analogy. The only way you make the volatility go away is you make the opportunity go away. The reason you went west was because people weren't living there and you wanted thousands of acres to yourself to live a better life, right? And when you got there, you found that there was no one that had come before you to clear the thing, and build a house for you and give you running water and hand the keys to you and do your bidding. Because, you were going to a new place. That was where the opportunity was. So I think it's very quintessential to the American spirit or the entrepreneurial spirit or just the human spirit. What about immigrants? A nation made of immigrants. People went from a country where they had nothing to a country where they could have something. That's the story that you see over and over again. Is there volatility? Is there a risk? Yeah, always, right? Is there opportunity? Yeah. When do you leave? Look, the rich first sons of the nobles in Europe didn't come. Yeah, it was the poor, disenfranchised, the people that didn't have a choice that came. Right? The Protestants left Catholic countries. The Catholics left Protestant countries. The poor left every country. Those who were, hoping for a better life came. And, if you're sitting wealthy with lots and lots of stuff and a comfortable lifestyle and a comfortable portfolio, you might not see the same impetus, right? You wouldn't have the same inspiration to do something.
It's interesting. So the humanitarian side of this is one of the things that I find more fascinating about the Bitcoin movement. There is something very encouraging about the fact that all the people in my life that came to me with this saying, Tom, you really have to look at this, were young people. The level of awareness that they have had and I have a lot of employees that sort of straddle, are they the low end of Gen millennials? Are they the upper end of Gen Z? I guess it depends on where you split it, but they're sort of early 20s. And, they're looking at this as like, hey, this is the opportunity our generation has been looking for. There's finally a moment where we can really capture some upside. We're young enough that if we sort of invest poorly, it should be fine, that we should be able to make this money back up. They buy into the ethos of only invest what you're prepared to lose. These aren't guys that are doing things on leverage. And so that is very hopeful. When you talk about the beginning of the pandemic was this wealth transfer to people that basically owned bonds and assets. And now with hopefully this sort of prolonged, and I think that's an important thing to note is, yes, there's volatility to Bitcoin in the short term. I've heard you say if you're looking at a number in anything less than a 4-year increment, it's just noise. And that once you extend out to 4 years and beyond, suddenly it actually becomes a story of, growing, I think it's like 200% year over year, which is, pretty thrilling. How far when you think about this being sort of the apex property, how much goes into just the fact that it's taking sunlight and turning it into something that's cryptographically protected, and how much of that stance is that this evens the playing field?
I think of Bitcoin as like that shining city in cyberspace where billions of people will eventually want to live. Right? Instead of moving from Europe to America, or moving from the old world to the new world, or whatever, or moving from the planet to cyberspace. We can't move to outer space yet. I can't get 1 billion people off the planet and settle on a better Earth. But I can move 1 billion people to cyberspace. Bitcoin is property in cyberspace. It's 21 million city blocks in cyber Manhattan. The people that move there first, right, get to buy the land cheapest. And then, how many people will eventually want to live there? Well, unlike Manhattan, where there's a limit, there's really no limit. Why wouldn't everybody want to live there, right? I mean, I don't know that there won't be other cities in cyberspace that might meet other needs. I mean, I suppose if the Chinese, made it illegal to own Bitcoin, but there was a Chinese Bitcoin, there might be a Chinese version of Bitcoin in cyberspace, kind of like Alibaba, and Ant and WeChat kind of branched off from Facebook and Google and Amazon. So there might be some other digital dominant monetary networks, but Bitcoin is the greatest monetary network that the human race has ever developed, and it's certainly the dominant one right now, and it looks like it's going to continue to be the dominant one for as long as we live. So what makes it dominant? Well, I mean, clearly the architecture is proof of work, or in other words, throwing up a wall of encrypted energy, right? It's all of the crypto hash power that's channeling energy through the hashing function, which creates the stability and the security. And so it's based upon the architecture, but ultimately the appeal of it is that it's an open, permissionless protocol that everybody on Earth can engage in. Anybody can mine it. So anybody can contribute security to the network, and anybody can run their own node, and anybody can own it, and then any company can plug into it. And so there's nothing that open. There is no monetary protocol or asset or currency that is so open as the Bitcoin asset. And so that's what's driving its value right now. It's an opportunity for people that have little to lose and much to gain. It's an opportunity for everybody, though. I mean, the way I think of it is, it's a moral imperative, a technical imperative, and an economic imperative. Morally, it's an imperative because it's the best hope for 8 billion people to secure their property rights. If I give you a $50 Android phone, you can carry around in the Android wallet your property, and no bank or no hostile regime can seize it. And that's the best property right you're ever going to get. I think it's a technical imperative for the same reason. You've got 8 billion mobile phones that will all have property. And so what's more important, storing your photos and your videos on your mobile phone, or storing all your money, all your life force on your mobile phone? I mean, you're worried about losing the photos you took on your iPhone, or you're worried about losing your life savings? Clearly, it's more valuable. So it's a technology imperative for an Apple and Amazon and Google and Facebook, and companies like Square and PayPal and Binance and Coinbase are already extraordinarily successful by embracing it. You can see that right now. And finally, it's an economic imperative because there's $500 trillion worth of fiat derivatives, cash and bonds and stocks and real estate that's valued based upon cash flows. And all of those things are being devalued at 1% a month, something. So we can go back and forth over what's the rate of currency expansion, but you know, it's not that hard to see that this is a $25 to $50 trillion a year problem for anybody with assets on Earth. It's very rare that you find a technology that's the solution to every rich person's problem and every poor person's problem simultaneously.